Today's episode is brought to you by Mazars.
SoundCartel.
As the marketplace becomes more commoditised, being able to differentiate your product or service will be fundamental to your success. From SoundCartel, this is Business Essentials Daily. I'm Peter Letts, filling in for Nicole Goodman. Despite enormous challenges for the business community over the last couple of years, there's been a big increase in the creation of new businesses. If history's any guide though, most of these new businesses won't be around in a few years. That's not necessarily a bad thing, says Barry Urquhart, but for businesses that want to stick around for the long term, a positive cash flow is crucial. Barry Urquhart is an internationally respected keynote speaker and consumer behaviour analyst at Marketing Focus. He says cash in the bank will allow you to market and differentiate yourself in an increasingly competitive and changing environment. That's not all that's changing. COVID's impacted the business landscape in other ways. Barry explains to Chris Ashmore.
In the last 2 years, we have seen a recalibration of a lot of businesses, industry sectors and commerce at large. Department stores have now declared that they're going to reduce the number of outlets by 20%, and the size of those businesses will actually go from 2 and 3 stories down to single stories. Supermarkets are now saying that 20% of their outlets will be converted not from, so much full-size 35,000 product range supermarkets down to metro stores where the product mix or the SKUs, the stock keeping units, will be reduced to around 18,000. So all of a sudden you've got less department stores, less supermarkets, less regional and national chains and networks of retail outlets. So all of a sudden you've got opportunities, but you've got smaller stores, less stores, and very focused stores with smaller product ranges. That's the scenario that you, as the entrepreneur who wants to get the marketplace and get it interested in your product, service, and offerings, are confronting. And so you're not able to say, well, this is the way we've always done it. It's a new scenario across the board. It's smaller, it's sharper, it's more disciplined, and in many instances, the product mix is full. When you're taking a new product, service or offering to the marketplace, in reality, it could well be that when you're talking to that retailer, that distributor or reseller, they're going to have to take a product or service off the shelf, remove it from their product mix and put yours on the shelf. You therefore have to show a comparative advantage. An opportunity cost is that if you put my product and service in your offerings, it will enhance your performance and profitability. That is a very different scenario when the economy is growing, when stores are growing, when there's more and more shopping centres opening up every week. That's not the scenario or reality today. So it's a very different, more static, contracting marketplace which requires discipline, structure, belief, and above all else, bottom line consideration.
And what about creativity, Barry? How important is creativity in business, and how creative are we in this country?
Since the onset of the coronavirus, creativity, enterprise and entrepreneurship has actually ramped up. More people are more excited and enthusiastic about the opportunities that are there. Creativity should be based on originality. What is the original thought? Where is the gap in the marketplace? What are the needs? And therefore, am I able, with my product, services and applications, to be able to satisfy the expectations, needs and demands of the existing past and prospective customers that I hope to satisfy?
When it comes to startup ideas, are there any issues that we have when it comes to startup ideas?
Yes. And it has to be that there's a quantum leap between an idea and a viable, sustainable and profitable product, service and application. And so there is a huge attrition rate. Let's take the base word of ideas. From the original idea, out of 100 ideas, 85% will not actually get to marketplace. And those that actually get onto the shop front, into the stores, onto the inventory, the product service mixes of products and organisations, about 6 will be able to get there and be a presence. to be around in 3 to 5 years' time and in a growing situation is less than 2%. So the success rate in the intermediate to longer term is very marginal. Therefore, there needs to be structure, discipline, and certain principles that need to be recognised and adhered to.
Mazars is an international audit, tax and advisory firm committed to helping clients confidently build and grow their businesses. To find out how Mazars can support your business, visit mazars.com.au. That's mazars.com.au.
If we delve into that a bit deeper, if the success rates for businesses are so low, how do business owners listening to this protect themselves from failure?
With those people who have been downsized, retrenched, furloughed, and that sort of thing as a consequence of the coronavirus, you've got to understand that there has been a growth in small to medium-sized businesses in Australia in the last 2 years, going from 2.3 million to 2.8. Sadly, many of those will not be a business. It will be that someone's established an income stream and they haven't got innate wealth, worth and capitalisation abilities with what they're actually operating. So the first thing that you need to do is to say, how do we establish a business that is going to be marketable so that if it is my intention to have that as my superannuation, my retirement fund, am I going to be able to go to the marketplace and people see worth in it and say, well, there's a good value factor, a goodwill factor, and there is generally worth for me to invest in your business. It takes discipline. The reasons why people fall short with an idea is one, undercapitalisation. Inevitably, when you run out of money, you run out of time, and when you run out of time, you run out of business. And that's why the attrition rate, which is often said about 75% of small businesses that start are no longer trading within 3 years. That's not necessarily a benchmark of failure, it's just not sustainability. Some will choose to close down, some will merge, some will be taken over, some will choose to grow a lot bigger. But it's not that sort of reality. So capitalisation and having capital, because in many instances in business, you need to invest, take a period of time before there's actually an income, a cash flow, and a positive cash flow coming through. And unless you've got capital reserves, you are going to run out very shortly. And it's cash flow that in many instances is the biggest demise causing factor in the overall operations. Then it's very hard to recruit and retain good people because they want stability, they want confidence, they want peace of mind. And if they say, gee, it's a great idea, but are we ever going to make a profit? And go back to April 2000, the dot-com crash, when financial commentators and analysts were saying, what is your PE ratio? What is your price worth as equity? Well, price, profit, what are you talking about? A lot of the dot-com crash companies of 2000 were generating numbers, but they weren't generating cash and, more importantly, profit. So you've got to have profit coming through the system. And then the third factor is, how do I get that marketplace to be aware of me? You need to be able to communicate, and if you haven't got income or capital to invest in that sort of thing, and you say, well, if we get sales this week, I can take some of that money and allocate it to advertising and marketing. Unfortunately, the equation is out of kilter and you're exposed, you are vulnerable, and inevitably you are going to be one of the majority of people who will not be around trading successfully in 1, 2 or 3 years' time.
Well, one of the biggest changes in recent years, and is always changing, is technology, of course. How can businesses use technology to help their business?
In marketing, as a case in point, I think is a classic situation. You have to have multi-channel communication, but you can't necessarily say, well, the most effective and cheapest way for me to communicate is to have a website, to go out on social media, to Twitter, Facebook. Yes, those are non-negotiable, but in many instances, they are the attributes and the platforms that open the door of opportunity. You need to be able to service those communication channels, and more importantly, when people are responding, they want immediate returns. Therefore, it's not so much convenience, it's no longer a geographic consideration, it's how quickly are you accessible and how quickly do you respond. Therefore, you can have the capacity because you've got all of the attributes of social media, but unless you've got the capabilities, and that's the human quotient, have I got the infrastructure, the people, or have I personally got the time to be sitting there being able to respond to those inquiries and convert them into sales? Well, that's where the deficiency is. So technology should inevitably be introduced because it's almost a non-negotiable imperative. But it should inevitably be that it complements rather than places or replaces the human quotient.
Artificial intelligence, how does that play into the game then? Or are we too reliant on it?
Artificial intelligence, in many instances, is artificial. And it's not very intelligent because it's to those people who say, I can talk to algorithms. Well, how many algorithms in the last week are going to have bought that product, service and application that you're selling? We've got to be able to convert the framework, the structure, the capital investment into the software. And so it's not technically all about capital, it's about the working capital, which is the human quotient. So artificial intelligence, it improves efficiency, it doesn't necessarily enhance effectiveness. To be able to take the base of the infrastructure, the framework, and say that's now been designed very efficiently with artificial intelligence and based on algorithms, but then you need the software to say it is all about how do we interact effectively so that the people are reassured, responded to, and are aware that they've got some sense of connection, recognition, and above all else, peace of mind. Because the peace of mind comes from not the brand, but what's behind the brand, the values, and the people.
That was Barry Urquhart, marketing strategist at Marketing Focus. This episode of Business Essentials Daily is produced by the team at SoundCartel. Thanks for listening. I'm Peter Letts. We'll bring you more Be Daily tomorrow. Follow @Be Daily Podcast across social media and head to bedaily.com.au for more from the Business Essentials Daily Podcast.
SoundCartel. This episode was brought to you by Mazars. To find out more, visit mazars.com.au. That's mazars.com.au.